When your income is less than you'd like, it's easy to feel like you'll never be able to buy a home, let alone reach your financial goals. And trust me, I get it. Bad credit and a low salary stops millions of people from even applying for a new home. But if you've put off buying a house because you believe your income will prevent you from getting the financing you need, it may be time to think again. Because in this video, we'll share with you how to get a home loan with low income. And if you stay to the end of this video, you'll learn 4 of the best mortgage programs to take advantage of if you meet the requirements. Taking the time to prepare, working with some good lenders, and understanding the loan options available will make your dream of home ownership become a reality. In order to learn all the advice we have on real estate investing, consider subscribing to the channel and turn on post notifications because we post videos every week on this topic, so definitely keep watching. So how do you buy a house with low income, you ask? We've got the answers you need to get started. And although mortgage lenders are available to help guide you along the way, first you must prepare to buy your first home. Here, we'll give you 5 steps to get started, but be sure to drop a like for the video so that this video reaches out to more people like you. Number 1, understand your credit score. The credit score is a huge deal in the lending process. Today, credit is used for borrowing, loans, employment, insurance, pricing, and a number of different things. The higher your score is, the more opportunities are available. Once you receive your reports, look over them carefully and correct any mistakes. Things like accounts that are not yours, addresses where you have not lived, and all other errors should be corrected. When you start applying for home loans, lenders will assume everything is correct, so make sure that all your bills are caught up. Also, do not close accounts even if they have 0 balances, because this could actually lower your score. Errors on your credit report could be pulling down your credit score, and disputing these could help you qualify for a bigger home loan. Just know that making a habit of paying your bills on time should improve your credit history over time. Number 2, create a budget. In most cases, lenders will allow you to have a monthly debt-to-income ratio of up to 36%. This will include all debt payments found on your credit report in addition to the new mortgage payment. Creditors use the minimum monthly payment when establishing a debt-to-income ratio. By living within a budget, you can determine how large a monthly payment is best for your lifestyle. Begin by using your current rent payment in the budget and then set aside the largest amount possible for a few months to see if you can manage a higher monthly expense. This will also help you put money aside for the down payment and closing costs. Understand that the total cost of home ownership includes more than just the mortgage payment. Other expenses like maintenance and utilities need to be considered. Sticking to a budget is one of the best ways to reduce expenses and increase savings, both of which will help build a down payment for your home. Number 3, save for the down payment. Set a goal to save at least 5% of the down payment and closing costs. Bringing your own down payment and closing cost money to the table simplifies mortgage qualifying. If you can't save, look for down payment assistance programs that help low-income families in your area. There are plenty of options to choose from if you do the research in your area. And we also have few videos on this channel that will show you how to buy a house with no down payment at all. So be sure to watch that one as well. Number 4, meet with a lender. A mortgage can help review which loans you will qualify for and how much you will need for a down payment. The lender will verify your income and determine what price you can afford and what your monthly payments will be. Finally, the lender can help you get pre-approved. This will enable you to proceed through the home buying process with confidence and peace of mind. When you take these steps before you even begin looking for a home, the process is much smoother. You can then start your search with higher confidence that you will be able to follow through on the purchase when you find a home you like. Number 5, find the right loan program. The right loan program should line up with your specific needs. For example, FHA loans work well for borrowers with low credit scores, and USDA loans are perfect for borrowers with no down payment. If you don't need this kind of help, you might save money with a conventional loan. Information is power. So understanding the home loan options that are available to you is important. Low-income borrowers have several loan options to keep in mind. It's important for home buyers to understand and explore all their mortgage options to set themselves up for success. So here are some of the programs in place that aim to help those with low incomes or low credit scores buy a home. The first is Home Ready Mortgages. Fannie Mae's Home Ready program and the Home Possible loan from Freddie Mac feature low down payment requirements. You only need a 3% down payment of the home's purchase price, and there's no minimum required contribution from the borrower. That means the money can come from a gift, a grant, or even a loan from an acceptable source. Even better, the home seller is allowed to pay closing costs worth up to 3% of the purchase price. Instead of negotiating a lower sales price, try asking the seller to cover your closing costs. The program also lets you add income from a roommate or renter on your mortgage application, even if they're not on the loan. This can help boost your qualifying income and make it easier to get financing. You might qualify for Home Ready or Home Possible if your household income is below local income limits and you have a credit score of at least 620. Next, there are FHA home loans. FHA loans are specifically intended for lower income, lower credit, or first-time home buyers. This program, which is backed by the Federal Housing Administration, makes it easier to become a homeowner by relaxing the standards borrowers must meet to get a mortgage. Depending on the lender you use, you might be able to get an FHA loan with a debt-to-income ratio up to 45% or a credit score as low as 580. I've even seen select FHA lenders allow credit scores starting at 500, as long as the buyer can make a 10% down payment. Thanks to these perks and others, FHA loan is one of the most popular low down payment mortgages on the market. Also, you may want to consider the USDA Direct Loan. This program is set up specifically as a home loan for low-income families. They are available to individuals with very low incomes, usually defined as 50% to 80% of the area's median income. Keep in mind, standard home loan lenders do not offer this program. You have to apply through USDA directly, so check your local area. Also, your income must be too low for other loan programs to be eligible, so you have to make sure you don't qualify for a standard USDA loan before you apply for a USDA direct loan. Now, for those who have experience in the armed forces, there are also VA loans. VA mortgages are backed by the Department of Veteran Affairs and are offered to qualify active duty service members, veterans, and military spouses. Due to their government backing, these loans typically come with less stringent credit requirements than other loans. VA loans can also come with better loan terms, such as low or no down payments and lower interest rates than conventional mortgages. Most active duty military service members and veterans can use a VA loan. The number one thing homeowners love about the VA loan is they have a 0% down payment, and the barrier to entry is almost non-existent. There are tons of options out there for low-income home buyers. It's simply a matter of finding the right one. Just because you're denied the first time doesn't mean you can't reapply. After you've cleaned up your credit, received a raise, or paid off debt, your income doesn't have to define you. While it's important to understand what you can afford so you don't overextend yourself, it's entirely possible to buy a house with low income with the assistance of home buying programs targeted at low-income buyers. Let me know in the comments if you found this video helpful, and don't forget to hit the like button so we know to make more videos on this topic. Subscribe to the channel so you don't miss out, and watch this playlist here that will give you detailed steps on how to find financing for your next property. With some perseverance and knowledge, you'll be in your own home before you know it. Until next time, we'll see you in the next video.